everyone. So for today's video, I'm going to be highlighting and analyzing the emerging and fascinating company Ideanomics. This is genuinely one of my favorite up-and-coming companies, and I think they are extremely well positioned for future long-term growth. But is it currently time to buy? I'll be giving a little background on Ideanomics, their current and future business operations, their current share price, their target price, and I will then be giving my own personal opinion of whether I think Ideanomics is currently a sell, hold, or buy. If you find anything beneficial or informative, go hit that subscribe button. I'm going to be doing a lot of future analyses on up-and-coming businesses with potential room for growth, so you don't want to miss those. So go hit that subscribe button, mix in a like maybe. I'd really appreciate it. Okay, without any further ado, let's get right into it. So I'm going to be giving a little quick background on Ideanomics because it is kind of an obscure business format they're working with. They have a lot of subsidiary companies. They're working through different international borders. It is a little bit confusing, so I'm just going to break it down really quickly. On a macro scale, Ideanomics is a global fintech company positioned within transformative industries. These industries are sometimes referred to as disruptors, and if you've been following business news for the past decade or so, you know disruptor companies have greatly benefited from the ever-changing landscape, especially in technology. Ideanomics is focused within the sleek, innovative, and novel technologies in the future landscape. They are positioning themselves into the world of smart cities, IoT, or the Internet of Things, IOV, input-output virtualization, which is essentially the pooling of IT technologies and data transfer. And essentially these technologies are creating this ecosystem where data is continuously and increasingly transferred between computers without human intervention. Essentially the AI and blockchain worldwide infrastructure. This technology allows for data to continually adapt to its own context. And depending on your view of things, this might seem quite scary, or it might seem really fascinating, or a mix between the two, which is currently where I stand. But nonetheless, you got to embrace change. Ideanomics is headquartered within New York City, but also has offices within China and was founded in 2004, so a relatively new company. On a relatively more zoomed in approach of Ideanomics business ventures, they have three main business divisions. The first being the Mobile Energy Group, or MEG. I don't know if people are saying MEG, but I'm going to start saying that now. And MEG is focused on transforming electric vehicles. Their second main business venture is Ideanomics Capital, which is focused on developing green, clean, FinTech technologies for the future landscape. And their third, which is somewhat in shambles, is FinTech Village. This may not come to fruition, but nonetheless, they are trying to develop somewhat of a FinTech city. They do see this as a potential lucrative source for the future. In my other videos, you'll see that I am quite a big fan of investing in FinTech right now, and Ideanomics is doing that on a macro and micro scale. So beginning with the Mobile Energy Group, or MEG subsidiary, they facilitate the transfer of electric vehicles, batteries, electricity, financial resources, and electric vehicle charging platforms between partners. They are essentially allowing greater access to global markets and provide discounting on bulk purchases. MEG or MEG is primarily focused on the commercial electric vehicle market within China. These commercial electric vehicles are specifically heavy trucks, commercial buses, taxis, and last mile driving vehicles. Ideanomics is deriving revenue from the bulk purchasing of these commercial electric vehicles, as well as providing the utility sector of the operation in the form of charging stations and prepaid wholesale electricity. These electric vehicles will use batteries for short hauls and hydrogen fuel cells for long hauls. And there is energy capital to be gained in the ever-changing future landscape. There is an estimated 700 billion USD in the commercial electric vehicle market within China, and this will only increase in the coming years and decades. A subsidiary of MEG, MMW, or Medici Motor Works, is primarily focused on the heavy truck unit of commercial operations. MMW is currently targeting operators of mines, airports, shipping ports, construction sites, which Ideanomics views as a potential gold mine in the world of electric vehicle and energy distribution. As companies such as Tesla enter this world, of commercial electric trucks. This industry is extremely poised to greatly benefit within the coming months and years. Being a penny stock, small business deals and press releases greatly affect the share price, which is why the share price rose over 67% on Monday, June 22nd. Ideanomics gained a 200 electric vehicle deal for Sichuan province in China, poised at over 3.2 million USD. So just this one deal skyrocketed the share price over 67%. So you can see how much a penny stock fluctuates with just little deals. This news of fulfilling 200 S50 EVs caused a firm base primarily of Robinhood traders moving 291.2 million shares, which made it the top traded stock on any US exchange on Monday, June 22nd. So moving on to their second main business venture, Ideanomics Capital is focused on small cap companies and revolutionizing the trading and security of assets with speed and reliability. Ideanomics Capital operates through one of its subsidiaries, the Delaware Board of Trade, or DBOT. This adds transparency, ease, and fully automated AI, advancing technologies to provide efficient trading, fundraising, and capital growth. And Intelligenta. Intelligenta operates through credit services. They perform risk assessment, fraud monitoring, and financial analyses in the world of FinTech. Ideanomics has also recently announced it's partnering with Zhongsen Tower, and this is an absolute powerhouse of a company within China, primarily focused on the 5G network and its infrastructure. Zhongsen Tower also provides IoT service and financing of supporting infrastructure. They have many partners, and with Ideanomics being affiliated with these partners, a plethora of doors have opened. It is estimated that the 5G nationwide network within China is going to require 6 million base stations, with Zhongsen Tower providing its base infrastructure. Meg will own 30% of this operation, being the largest co-shareholder of the deal, and will derive revenue by the powering of the Zhongsen Tower base stations. They will do this through rental and energy sales. These base stations are required for the emerging smart cities, smart shipping, IoT, and IOV, basically the pooling of IT infrastructure and data transfer. Ideanomics' share price is also rising from news that the company is expanding into new markets. They are well positioned within China and Southeast Asian markets. They are the majority stakeholder of Malaysian company Tri Electric, an EV manufacturer and distributor. They plan on developing sales cooperation with freight trucks in the United States in the coming months and years. And they have released a statement with objectives in Saudi Arabia, Europe, and emerging markets in South America and Africa in the coming years. Commercial electric vehicles are well positioned to dominate the future mobile landscape in China, as authorities have created China's Green Energy Plan, which focuses on reducing emissions and conserving energy. China's plans encompass converting 100,000 pre-existing gas stations to charging stations, and they currently have or are in the process of obtaining 11 million heavy trucks, 13 million delivery vehicles, 1.2 million taxis and ride sharing, and 1.6 million buses. Jumping to their balance sheet, they are currently hovering around $272 USD with a current market cap of $454 million USD. They have quite a high 52-week spread, their high being 398 and their low being 0.28. They aren't reporting a PE ratio as they have suffered net income losses. They have a very low beta value of minus 2.25, but I expect this to greatly rise. And taking their net income and dividing it by their average outstanding share price, we get an EPS of actually minus 0.768. Yahoo Finance is slightly off, and they do not pay out a dividend. Their price to book is 11.65. They are not profitable yet. They have a terrible return on equity of minus 202.37%, have 5.91 million in cash, and have a current ratio of 0.33 assets to liabilities. Their net income for 2019 was a loss of 97 million, way up from the previous year of 27 million. In 2019, they drastically reduced their cost of revenue from 374 million to only 1.4 million, which is very impressive, which really helped their profit margins, increasing from 3 to 43 million. However, their other expenses greatly increased, which may be a signal of developing their marketplace and infiltrating new markets and advertising. However, this is chewing into their net income. It's very clear that there is a ton of speculation priced into this current share price, and that investors are essentially betting on Ideanomics for the long term, while bracing for impact in the short to medium term. I really do think that this current share price will drop within the next few weeks, and you may be able to find a better entry price. So for that reason, I'm currently waiting on the stock, seeing what happens, and then I will buy in, as I do see great potential for Ideanomics long term. I'll be following up with this company periodically and other EV manufacturers, so make sure to toss a subscribe, just mix one in, and I hope to see you guys next time. Thanks for watching.